Good morning, everyone. Welcome to the Stock Market Morning Prep video for Monday, April 13th. I hope everybody enjoyed their weekend. We're getting into the heart of earnings season now, and I wanted to just kind of go over a couple things. First of all, the ES, or the S&P 500, has been up 5 out of the 6 trading days. It doesn't look like it if you looked at a 15-minute or a 30-minute chart, for that matter. Right in front of you, you could see the S&P 500, the spiders, the ETF tracking. You'll see a 15-minute chart in front of you. It's just a mess. It's a big, choppy mess. And we just, at the end of the day, kind of grind to new highs. And you look at a daily chart, it paints a different picture. You can see that here. That's on the spiders itself. So if you look at the contract, you'll see that the ES has been up, again, 5 out of the 6 trading days. Where's the volume, though? Volume has been anemic. We have no volume in the S&P future contract. 740,000 contracts traded on Friday, which is dismal, and there's no volume to be had, and that's why we're getting a lot of that whipsaw movement. Markets go up during the course of the trading day, and then they knock them down to run the stops, and that's what's happening here. I also think that there's a lot of a lot of traders betting on a dismal earnings season. So for that matter, they may have put their bets a little too early, and now we're getting the short squeeze, like I mentioned last week in a couple of videos. So ton of earnings coming out this week, a lot of banks coming out this week, big expiration week, so really need to be on our toes. Now Thursday, and let me just get this out, move this out of the way, we had Friday. You can see Thursday's low here, which matched that 50-day moving average, at 207. Call it 207 if you're looking at the ES. That really is going to need to hold on for any further downside movement if this were to reverse right now. So as you can see here, where MACD has crossed over, giving us a buy signal. RSI has moved higher above zero, above the 50 percentile. So everything looks like further prices are coming to the upside. Now, can that change? Absolutely. But remember, we had weakness in the transports, which they went up as well. And I'm going to show that to you in a moment. But I just want you to be careful here, because there's a low volume in this marketplace, and Mondays usually tend to become like Friday lately. It's been kind of dismal with the volume, very slow type of trading. And what happens is, you have the markets push up, and the next thing you know it, you're getting stopped out, and then all of a sudden the markets move back up again. So the early part of April is really not what I wanted to see. Usually we get some weakness the first 2 weeks of April. Then after tax season is over, meaning April 15th, paying Uncle Sam, then the markets tend to rally a little bit going into the end of the month. So now the best time of the month would be April for the best trading month of the year. And let's see if this can push up to new highs. Now, we're having this problem here, and this is what's happening. You can see this on the daily chart. Let's go back just from March itself. You could see that we've just been in this ridiculous range, and it's just horrendous. The price action is just terrible. And you can see we run up, we sell off one big candle, we go up for 4 days, we sell off for 3, we go up for 5 days. So there's no true direction here. Okay, either we take out the high, or we start taking out this midterm low here of 204 and really get going. That's really the bigger picture low here. But for now, I'll accept the 207 low. But this is where we are here. Just one big mess again, like we were back here in December and January and parts of February here. Another big mess until the markets broke out here. So we are making higher highs and higher lows, which is a good thing. But we also have to watch everything else around us, like the transportation sector being the weakest, and it is our leader. Right? I'm going to show that to you in a moment. Let's take a look at the diamonds. Diamonds actually recovered as well, back above the 20, back above the 50. Okay, this low here at 177, let's call it 178, rounded off, and the diamonds, which is the Dow Jones ETF, needs to be watched closely if we start to roll down. Remember, we're still making lower low and lower high here from this area. Okay, but if you make a little triangle here, you could see that we have this little downtrend line that we need to really start to take out of. Okay, so this is something here I'm watching this week. Generally, also the options expiration week tends to be bullish. We get a couple of weekdays, and then they kind of rally them into the end of the week. But again, that changes at any given moment. Here is the transportation sector. And you can see what a big mess this has been since this big move up here from the lows of October. All right, but we could see just literally going nowhere. And we finally broke down, bear flag into that 20. Now we're going to see if this flag is going to actually start to work for us as far as to the downside. We need a break and close below the lower trend line to trigger a downside break. Okay, and that would be trigger a sell signal in the transports, which would be also very difficult for equities to start to move higher if the transports really start to break down and lose that 200-day moving average. The other thing I want you to look at is the VIX too. Now, a lot of people are not paying attention to that, but really if you watch the VIX and the VIX starts to really break out from the highs, that's something that I would be paying close attention to as well. Let's take a look at the IWM, the Russell. Now, the Russell, which is our secondary leader here, has been absolutely holding in well. It has been doing quite well. We broke back up again and just drifting higher. Also, a very difficult trader if you trade in the future. Very difficult trader. So be careful if you're trading this. But nonetheless, if the transports, the Russell moving higher, banks and financial are 25% weighted. And also, don't forget, we're going to have earnings for a lot of banks and financials this week. That's going to affect the Russell in a big way. Okay. Lastly is the Qs, and you can see that the Qs are very much the same of the S&P, the SPY. You can see this little range that we've just been in here, just bouncing around, doing not much of anything here. So this is a very sloppy trading. It's been very sloppy trading since October, and you can see here, same thing. We run up, we just literally bounce back and forth here, break out, fail, and now we're just sitting in this area. So the bottom line in a nutshell is that money's going to need to start coming in or out of the markets. And what I mean by that is we need to start breaking out, taking out the highs, and there'll be new money coming into the markets. Or we start breaking down and taking out some of these internal lows, because if that's the case, then markets will be coming out, money will be coming out of the markets, and going into other asset classes. And then at least we could start taking small positions on the direction of where the market is headed. But right now, with this type of chop, it just makes no sense at all. Be very patient in your trading. Be very selective in your trade setups. And again, follow your trading plan. If you're successful in the plan, stick to it, because eventually it will start to pay for itself again, meaning yourself, as far as your trades are concerned. Other than that, it's just a very quiet and choppy trading with no volume. So just use a little caution. Make sure your stops are in place. Make sure your analysis agrees with my analysis. Have a great day, and we'll speak to you tomorrow. Take care, everybody.